It's 5 a.m. in New York City. Good morning. I'm Lizzie Burden, in for Danny Berger all week with your Bloomberg Brief. Here's what you need to know. A rush for deals. Stock futures drop as trade tensions return ahead of the July 9th deadline. Secretary Bessent, though, hints at an extension. Fresh tariff threat. President Trump warns of an additional 10% levy as BRICS nations gather in Rio. And feud reignited. The president slams Elon Musk's announcement to form a new political party. Well, T-2. We are 2 days away from President Trump's self-imposed tariff deadline. Or are we? We have the Treasury Secretary saying that there could be a 3-week extension for certain countries. But then we have the president ramping up the pressure on the BRICS nations and saying that those tariff letters we were meant to get on Friday, well, they're coming today at noon Eastern time. And that is what the market is latching onto this morning, the escalatory language from the president. So futures lower, but S&P futures were down 0.5%. Now flip the board over to the Treasury picture. There isn't a whole lot of movement in either direction, but we've not got much on the docket for this week when it comes to the eco data. We're pretty light. We've got the Fed minutes, though, to look out for on Wednesday. But this risk-averse sentiment is weighing on euro dollar because we've got the dollar higher on the flip side, so we're down at a 117 handle for euro dollar. But let's take a look at some of the pre-market movers we're watching this morning. Joe Easton's with us for that. Joe, what's on your radar?
Hey Lizzie, so we've got a significant drop in Tesla this morning. As you mentioned there, it is all related to this news around Musk launching his own party, the America Party, and Trump deriding it, calling it ridiculous to reporters. We're seeing Tesla down 7% almost in the pre-market. Analysts saying they just wish Musk would get back to focusing on Tesla and the brand, therefore that weakness coming into the stock today. Then we've also got a bit of M&A. Capgemini here in Europe, the French company, going over to the US and buying WNS at a decent premium, around a 10% premium from where it closed on Friday. This is agentic AI, so AI that can operate on its own without human intervention, a really hot space at the moment, and WNS rising around 11% today. Then in the casino space, we're not spending enough money over in Las Vegas, according to analysts at Goldman Sachs, and they therefore give a sell rating to MGM Resorts today. They actually have a buy on Caesars, the rival, but both of those stocks are slipping this morning, giving Goldman is negative on Las Vegas. And as usual, check out the Before the Bell opening wrap on the terminal for a summary of these news movers and more, Lizzie.
Excellent work, Joey. Thank you so much. And we'll catch up with you later again in the hour. Now, in just moments, we're going to be speaking to Anna Rosenberg of Amundi Asset Management. And later on this hour, Paul Weeks of Water Tower Research will be unpacking investor risks ahead of this week's tariff deadline. But we are just 2 days away from that self-imposed deadline from President Trump on his US trade partners. And Amundi's Anna Rosenberg has been weighing in. She writes, the most likely outcome is a combination of new deals being announced, some countries where talks are progressing, seeing a deadline extension, while some countries will be hit with tariffs. And I'm pleased to say that Anna joins us now. Welcome to the programme, Anna. Good morning. I'm looking at all of this, and we've got the Treasury Secretary, Scott Bessent, indicating that there could be this 3-week extension. You've got the president ramping up the escalatory language. Who should we listen to?
Well, I think we should listen to both, right? This is exactly the tactic. You at the same time ramp up the pressure while you hint at an extension. I think that the extension probably aims at calming market reaction somewhat, saying, calm down, guys, this is not going to be as bad as you think. So I think we're seeing a combination of different things playing out here right now. And ultimately, I don't think it's going to change much, right? Because we haven't got a whole lot of deals agreed upon now. And this is because trading partners are wanting to see what will happen whenever the deadline actually hits, right? Are we going to see a lot of tariffs being implemented or not? You can always walk back and agree to deals once you have been hit with a tariff, like we saw with China, for example.
But the president's got the wind in his sails from passing the One Big Beautiful Bill. We know that we've seen the stock market hitting record after record. Do you have hopes of progress on deals by Wednesday then?
Well, I think we may be seeing, a few deals. It's very difficult to make specific predictions on the individual deals because everything that you hear that is being leaked to the press is part of the negotiation. So you could see some deals where we think, things are likely going to materialize, like the one with India. falling apart, right? Versus you're seeing some deals that are quite difficult to actually materialize, like the one with the EU coming to fruition. It's very difficult to really make a confident judgment call on these deals. But I think the fact that we kind of have an extension now is going to take the wind out of the sail of some of these negotiations, because why rush now when you have a few more weeks to negotiate, potentially get something else out of it?
And when you look at the Vietnam deal, of course, 20% is double the 10% universal tariff. So does that mean that actually the tariff rates in general across the board are going to be higher, closer towards the top end of the tariffs that the president's been threatening, when, you know, we know that he needs this revenue to fund that big, beautiful Bill's tax cuts from Friday?
Well, I think let's wait and see here. I mean, you know, again, the conclusion that many trading partners will have drawn from the deals that have been struck so far is that these deals are not great for us. So maybe we shouldn't be rushing towards them. Ultimately, the Vietnam deal is not good on paper for Vietnam, and indeed seems higher than those 10% universal tariffs. But let's take a step back here. Okay. Initially, when you go back and read the paper by Stephen Mirren that was published just before the election, there was a clear strategy here. And the strategy was we need 10% tariffs with everyone without retaliation. Now, how do you get that? Well, you get that by actually making much more aggressive demands, much bigger demands. And this is what Trump has done. He's gone in with much higher tariff demands, tariff expectations, and ultimately no one has retaliated yet. So if he walks away with 10% tariffs across the board, that's a pretty good outcome. Everything on top of that will be a bonus.
You talk about retaliation, Anna. We saw the EU-China summit ending early last week. Does that suggest that actually Brussels isn't going to be willing to roll over in the trade talks with Washington, and that actually President Trump should be braced from retaliation there?
So clearly, I think that's a very important point. You mentioned two important points. Firstly, the issue of retaliation, and secondly, China. So I think that we should expect some level of retaliation. The EU is historically a very tough trade negotiator. They don't make those deals easily, also because they have to coordinate amongst many member states, right? So I think that there is going to be an element of retaliation if this doesn't go into the direction that is useful for the EU. And it doesn't look like it at the moment, okay? So that's one thing. The second thing, on China, we have to keep in mind that what this is. We're having growing economic friction. The trade deals that the US has signed so far aim at sidelining China, okay? And China is taking notice. And we have already seen China flex its muscles over the last few weeks by limiting rare earth exports. If more of these deals sideline China, I think we should start to see China taking leverage again of those rare earth exports. So I think there's going to be more friction here.
When you look at the US-China relationship, of course, we've already had the talks in Geneva and London. We've got this framework agreed, but we've seen the US lifting these China chip design software curbs. And I wonder whether you look at that and conclude that actually President Trump's more focused on getting deals than he is on national security.
So, firstly, I think that the US-China relationship is going to continue to deteriorate, right? This is a great power competition, and China is catching up on many areas, and the US is not going to be happy with this. So, ultimately, right now, both sides are in a scenario of tense understanding. They both understand this is not a, you know, they do not want things to escalate. But ultimately, what we have seen from China is, in the last few months, is a lot more confidence and boldness. And China is going to make use of this much more. So, I think, again, we are in this tense understanding scenario, but ultimately the relation will continue to deteriorate, and China will use its muscles when it has to.
All right. Anna Rosenberg of Amundi Asset Management. We're going to have to leave it there. So good to see you. Really nice to have you on the programme.
Thank you.
Well, now to the other top stories trending on the terminal this morning. China hits back at the EU's restrictions on its medical device makers while maintaining key exceptions. The trade moves come days ahead of a meeting between the EU and Chinese leaders in Beijing that may touch on various issues, including the bloc's tariffs on a surge in Chinese EVs and Beijing's support for Moscow since it invaded Ukraine. Elsewhere, multiple small vessels attacked a ship in the Red Sea, causing a fire on board and prompting the crew to abandon ship before the Israel army carried out airstrikes on Houthi-controlled ports in Yemen. The IDF said the strikes were in response to the repeated attacks by the Houthis against Israel. A passing merchant vessel rescued all the crew members, while the ship remains abandoned. And this just dropping on the terminal moments ago, Apple appealed a $580 million fine from the European Union, calling the penalty unprecedented, and the regulators required changes to its App Store unlawful. The European Commission announced the fine in April under its Digital Markets Act, saying that the iPhone maker ran afoul of its rules relating to allowing developers to steer users to make purchases outside of its store. Well, coming up, July 9th approaches, but Bessent and Lutnick suggest that nations have until August to avoid being hit with President Trump's reciprocal tariffs. We'll unpack the latest next.
I think we'll have most countries done by July 9th, yeah. Either a letter or a deal.
But they go into effect on August 1st. Tariffs go into effect August 1st, but the president is setting the rates and the deals right now.
President Trump and US Commerce Secretary Howard Lutnick speaking there about the timings relating to the upcoming and so-called reciprocal tariffs. Treasury Secretary Scott Bessent also hinted over the weekend that countries would have until August 1st to make offers and reach trade deals. So joining me now to discuss is Bloomberg's Brendan Murray, who of course leads our global trade coverage. Brendan, the president says that he's delayed sending these tariff letters till midday New York time because the negotiations have continued over the holiday weekend. So what progress was made? Do we know who's closest to a deal?
Well, we know that the European Union was talking throughout the weekend. We know Japan was still in discussions. Countries such as Indonesia, India, South Korea, Switzerland are also near the finish line, but whether they can get over before July 9th is a big question. And what you heard Howard Lutnick saying there next to the president was adding a bit of wiggle room there to say the tariffs won't actually take effect until August 1st, when they've been saying all along they're going to take effect July 9th. So there's an extra 3 weeks. Now, 3 weeks isn't a whole lot of time to get over the most contentious of issues, but at least it kicks the can down the road so that there's a bit more time to get some of these more important deals economically in the win column for the Trump administration.
Yeah, so the strategic ambiguity continues, but what definitely sounds escalatory is the president threatening the BRICS nations with this additional 10% tariff. Brendan, what about them or their summit over the weekend prompted him to lash out in this way? How does it affect negotiations with India, for example?
Yeah, I mean, it throws a wrench in a process that's already having trouble coming up with a final deal. The president has long had an issue with the BRICS and the rivalry with the United States in the global trading system, and so this was an interesting point where the BRICS are trying to set up their own sort of power center, trying to portray themselves as the center of stability and economic prosperity, while Trump, on the other hand, maintains his role as disruptor in chief in this environment. So an interesting contrast there, where the BRICS are trying to stabilize or portray that they're stabilizing things, and Trump disrupting things with this new threat of tariffs.
All right, Brendan Murray, we thank you, and I'm sure you'll keep us posted on the latest out of Rio. But staying in Washington, Tesla CEO Elon Musk has said on Saturday that a new America party that he'd been threatening to launch has now been formed. That came the day after the president signed his tax cut and spending bill into law, which Musk, of course, has been opposed to. Now, Trump let reporters know his thoughts on that party.
It's always been a two-party system. And I think starting a third party just adds to confusion. It really seems to have been developed for two parties. Third parties have never worked. So he can have fun with it, but I think it's ridiculous.
Joining me now is Bloomberg's DC breaking news editor, Kasia Klimaszinska. Kasia, what might Trump do about Elon Musk's new party?
Good morning. Just as you mentioned, President Trump had a big victory over the weekend. On Friday, he signed into law the mega bill with most of his domestic agenda in it, including tax cuts. And in this bill, there was also this electric vehicle tax break that went away. And that's possibly what triggered the reaction from the world's richest man, Elon Musk, who said over the weekend that he is setting up a new party, the America Party. And so this fight between the world's two most powerful men continues, with President Trump now saying there is no chance this third party will succeed. But it does look like Elon Musk has a plan. He specified on X over the weekend that he's really going after a couple of seats, maybe 2-3 seats in Senate, and maybe 8 to 10 in the House. So as you mentioned, President Trump said this plan won't succeed. He already spoke on Truth Social. He can go farther, right? He can go after Musk's businesses. For example, he has said before, he threatened that the federal government might withdraw some contracts. So there is already some concern on markets. I saw Tesla shares being down pre-market this morning. We'll see what happens when the U.S. market opens.
Yeah, the idea that actually Musk is taking his eye off the ball again when it comes to running his business. Too much focus on politics, it seems, for investors. But let's just also talk about this visit from Israeli Prime Minister Benjamin Netanyahu to Washington. He's scheduled to have dinner with President Trump later on. The BRICS summit over the weekend has given out this statement opposing Israel's war with Iran and the actions in Gaza. If we put it all together, does it look likely that there's going to be much progress towards a Gaza ceasefire out of Netanyahu's visit?
Exactly. So those two events are related, right? So BRICS had their summit over the weekend and they criticized Israel's action in Gaza. And now today, President Trump will host Benjamin Netanyahu at the White House. This will be the third visit from the Israeli Prime Minister since President Trump became president again. And there is an expectation that Trump will announce some sort of a ceasefire, even as it's a very hard thing to agree on. But he's looking at getting Israel and Hamas to agree to a 60-day ceasefire, hoping that it will lead to some sort of a longer-term peace.
And will we see progress on the Iran nuclear issue as well? Because, of course, this was the whole reason that the US struck Iran.
That's a great question. So clearly, President Trump is trying to use the momentum he has here from reaching a ceasefire between Iran and Israel. But we'll see how much farther he can get. Again, like there's this dinner today around 6 p.m. when the two men can talk, and we'll find out what happens.
Okay, Kasia Klimashinska out of Washington, we thank you. We'll catch up with you again later. And coming up on the programme, a look at what else is making headlines around the world, including those devastating, tragic floods in Texas. This is Bloomberg. This is Bloomberg Brief. I'm Lizzie Burden in New York. Time now for our front page news, a look at what's making headlines around the world. First up, the New York Times leads with the tragic floods in Texas. More than 80 people were killed in these disastrous floods that roared through central Texas on Friday, with rescuers still searching for survivors. Dozens, including 10 young campers from Camp Mystic, an all-girls summer camp, are still unaccounted for. Next up, the Wall Street Journal reports that Columbia University's Board of Trustees discussed terms of a possible deal with the Trump administration. Sources familiar with negotiations say it would restore at least some of the school's federal funding. The exact terms of a deal are still being hashed out, and any deal could still fall apart. And splashing the Financial Times, Tony Blair's staff is participating in a project to develop post-war Gaza. The plan, outlined in a slide deck seen by the FT, reimagines Gaza as a thriving trading hub. It proposed paying 500,000 Palestinians to leave the area and attracting private investors to develop Gaza. Well, let's check in on these markets. You're looking at futures pointing lower in reaction to the trade news. Donald Trump stepping up his threats, at least towards the BRICS nations, and saying that those tariff letters that we were waiting for on Friday are coming today at noon Eastern, so we keep an eye out for them. He says they'll be going to 12 to 15 countries. So we've got S&P E-minis down 0.5%. The dollar stronger because of the risk-averse sentiment. And we've got the euro actually on the flip side weaker, about the same. We're at 117 for that. And when we look at your bond space, the 10-year Treasury yield currently is there. Weaker a basis point as we look to the long end of the curve. Just looking at oil, 4.35%, there we have it on the 10-year yield. My eyes didn't deceive me. Looking at the oil space, we actually have Brent stronger at the moment. Of course, we had the OPEC Plus discussion over the weekend, turning on the supply taps even more than expected. 548,000 extra barrels a day, up from 411,000 in May, June and July. So an acceleration of this strategic pivot away from restraint led by Saudi Arabia. JP Morgan and Goldman Sachs actually see $60 per barrel by Q4, but it seems by the looks of this morning's reaction that traders are more confident there is enough demand to absorb that extra supply. So Brent there trading up 0.2% at $68 a barrel, gold at $3,309 a troy ounce. Coming up, tariff tensions abound. We're going to be speaking to Paul Meeks of Water Tower Research on all of the risks ahead. Does this rally have legs? This is Bloomberg. It is 5:30 a.m. in New York City. Good morning. I'm Lizzie Burden in all week for Danny Berger with your Bloomberg Brief. Here's what you need to know. A rush for deals. Stock futures drop as trade tensions return ahead of the July 9th deadline. Secretary Bessent hints at an extension. And fresh tariff threat. President Trump warns of an additional 10% levy as BRICS nations gather in Rio. And feud reignited. The president slams Elon Musk's announcement to form a new political party. So it is crunch time, 2 days until President Trump's tariff deadline, or is it? We've had hints that some countries could get a 3-week extension, but markets seem to be more concerned with the president threatening to slap an additional 10% tariff on BRICS nations and his threat that the tariff letters are coming today at noon Eastern time. So it's the escalation that futures are latching onto here. Quite a different picture to where we left things before the holiday weekend. US equities, of course, hitting a fresh record off the back of the jobs report. But now we have S&P E-mini futures down 0.5%. Now, when it comes to this Treasury market, it is a data-light week. We've got Fed minutes on Wednesday, but for now, yields pretty steady across the curve. The dollar higher on the risk-averse sentiment and euro dollar on the downside at a 117 handle. So let's have a look at some of the individual stocks that we're watching this morning. With that, Joe Easton's back. Joe, what are you watching?
Hey, Lizzie, so we have got Tesla significantly lower in the pre-market today. We're down close to 7%. Now, there is a twofold impact going on here. Firstly, Trump slamming Musk's new political party at the weekend, deriding it as ridiculous, spurring more concern that Musk is going to be distracted from Tesla. And also, the other element, the big, beautiful bill, removing fines for certain vehicles that don't hit emissions targets. And that was seen as a positive thing for Tesla. But removing that, hitting the stock this morning. So we're down almost close to 7% at the moment, 6.5 on Tesla. Then we've also got a bit of M&A. We've got Capgemini here in Europe, the French company, going over to the US and buying WNS. This is a company that does agentic AI, so AI that can operate on its own without human intervention, a very hot subject at the moment, of course, and we are seeing WNS gaining around 12% this morning. Then finally, casinos. We're not spending enough over in Las Vegas, according to analysts at Goldman Sachs. So they put a sell rating today on MGM Resorts, saying that that is the most exposed to Vegas, and also just general macroeconomic uncertainty. They do like Caesars, but that one's slipping. Both of those stocks are lower. Keep an eye on the casino stocks this morning, Lizzie.
Joe, I've never had you down as a gambler, but maybe you are up for a flutter.
Bit of football. I love a football bet.
All right, well, good luck to you. We appreciate it, Joe Easton, with our stocks to watch. Now, let's zoom out a little and look at the broader markets, because as I say, we've got stock futures edging lower this morning after we hit that fresh record again before the long holiday weekend on Thursday. Paul Meeks of Water Tower Research writes, quote, I think that US equities are a bit overextended, although there they may continue to be some post-big beautiful bill euphoria to keep this rally going. Paul Meeks joins us now. Welcome to the show, Paul. Where you think that US equities are a bit overextended, what's the trigger point to sell? Because we're getting not too far from 6,300, for example.
I don't think it's necessarily a valuation level, either on an absolute or relative basis for a benchmark like the S&P 500. I think the key is the looming deadline on the 9th of this month for the tariff deals or no tariff deals or blended tariff deals. So I'm more worried about the geopolitical risk that could be the next catalyst, not necessarily worried that the market is too overextended on a valuation basis.
So you don't think that this market is becoming immune to trade headlines? Because I was wondering whether we were going to have a less volatile second half than the first half.
Excellent question, Lizzie. Here's what I think. First of all, we only have a smattering of deals that have been announced. Maybe we'll have a few more in the next few days. But what I expect is what Treasury Secretary Scott Bessent leaned into the other day. It looks like there'll be an extension to the beginning of next month. And will we have anything resolved by then? I don't know. But Liberation Day, which started to cause the drop in stocks, was April 2. And so when companies announced their last quarter results ended March 31, it did not include Liberation Day tariffs. And so it'll be interesting to see when companies report in a few weeks, the quarter ended June 30, if they have more to say about it, and also if we get some more information from the White House. But unfortunately, we haven't seen the impact yet on company fundamentals.
Yeah, when it comes to earnings, do you expect that the hit from tariffs is going to outweigh the boost from tax cuts?
I think tariffs for any company that is importing goods, particularly from China, is a much worse impact. Because even though they've tightened the tax loopholes over time for the corporate tax rate, companies still have relatively low rates, particularly multinationals that can steer some business to subsidiaries abroad that pay no taxes or low taxes. So to answer your question directly, much bigger threats, in my view, the tariff versus any positive boost in a lower tax rate.
And when are we going to see the uncertainty that's already been revealed in the survey data show up in the hard data? I'm thinking about the inflation print that's upcoming next week.
Yes, we haven't seen that yet. It appears that the economy has been quite resilient. More data on that last week. But yes, when I see consumer sentiment soften, and in this country, the consumer spending is 70% of US GDP, that does worry me. So again, I'm waiting for resolution, both on these tariff deals and also on just the soft data, which is turning downward, ever find its way to the hard data.
And as a primarily tech investor, if you look at the jobs data, of course, we've got the jobless claims coming up later on this week. It seems like companies are hoarding workers. They don't want to hire, they don't want to fire. And a lot of analysts have been putting that down to all the tariff uncertainty. You know, they don't want to make a decision till they know what's what. Are we actually getting all this wrong, Paul? Is it actually the case that companies don't want to hire anybody because they've got AI to do the work that humans were doing?
I think they don't want to hire folks for two reasons. One is everybody is telling us, the CEOs of major companies, that perhaps over time, 50% of these jobs are replaced by AI. But it's also, think about if you are the CEO or CFO of a company and you're trying to plot your budget, and with all this madness and these unresolved issues, you probably do not want to spend too much until you get some clarity that I was talking about a few minutes ago. And so I think those are the two big, they're not drivers, let's call them obstacles.
Paul, thanks so much for joining us. Great stuff as always. Paul Meeks of Water Tower Research. Now, to some other top stories trending on the terminal this morning. China hits back at the EU's restrictions on its medical device makers while maintaining key exceptions. The trade moves come days ahead of a meeting between the EU and Chinese leaders in Beijing that may touch on various issues, including the bloc's tariffs on a surge in Chinese EVs and Beijing's support for Moscow since it invaded Ukraine. And multiple small vessels attacked a ship in the Red Sea, causing a fire on board and prompting the crew to abandon ship before the Israel army carried out airstrikes on Houthi-controlled ports in Yemen. The IDF said that the strikes were in response to the repeated attacks by the Houthis against Israel. A passing merchant vessel rescued all crew members while the ship remains abandoned. And Jurassic World Rebirth scored the top spot in theatres over the 5-day 4th of July holiday, grossing more than $147 million in the US and Canada, topping estimates. The film is the 7th entry in the Jurassic franchise, it's taken in over $6 billion in ticket sales since the first release in 1993. Well, coming up on the programme, Secretary Bessent hints at a tariff extension as the deadline looms. More next. This is Bloomberg.
I think we'll have most countries done by July 9th, yeah. Either a letter or a deal.
But they go into effect on August 1st. Tariffs go into effect August 1st, but the president is setting the rates and the deals right now.
US trade partners are rushing for a deal ahead of Wednesday's tariff deadline as the Treasury Secretary Scott Bessent hints over the weekend that countries would have until August 1st to make offers and reach deals. Joining me now for more is Bloomberg's DC breaking news editor Kasia Klin-Mashinska. Kasia, good to see you again. Look, these country-specific tariff rates don't kick in until August, according to Lutnick and Bessent. So I'm just wondering what happens when the July 9th deadline passes then.
Good morning. So I think the U.S. Commerce Secretary Howard Lutnick specified it best, right? The tariffs kick in on August 1st, but President Trump is setting the tariff rates and deals now. That means that this week, actually as early as noon today, we will find out what are some of the new tariff levels for some key U.S. trading partners. And then later this week, President Trump maybe will announce some trade deals or some broad trade frameworks, and he will send more letters to more U.S. trading partners. Then there's additional 3 weeks for further negotiation. But remember, we already had 3 months, right? President Trump announced initially those higher tariffs on April 2nd, and since then the U.S. has been negotiating with, as Trump said, about 200 countries, but we have very little to show for that. There is some sort of an agreement, some sort of a framework with the UK, there is an agreement with Vietnam, and there is the very important thought with China. But as far as the other countries, we have to see whether there will be more agreements, more deals, or just those new tariff levels, which would indeed then kick in next month.
Well, yeah, the president's threatened BRICS nations with an additional 10% tariff. So does that mean that there's zero hope of an India deal by Wednesday?
That's indeed very interesting because we know that the US and India have been negotiating over the last couple of months, but we also know that India is a very hard trading partner. So we will have to see whether, again, this week, whether there is a new sort of agreement, a framework, or a new tariff rate for India.
And speaking of opposition, Kasia, the president's finding some in his old friend Elon Musk. Just how has he taken the news of the Tesla CEO's new America Party being formed over the weekend?
Yes, so this fight between the world's two, maybe the two most influential men is escalating, with Elon Musk saying that he has in fact formed a new political party, the America Party, and President Trump saying that it has no chances of succeeding, going personally after Elon Musk. Remember that just on July 1st, President Trump said that Elon Musk perhaps took in more subsidies, federal subsidies, than any other human being. So there is a risk there, obviously a potential threat of President Trump withdrawing some of this federal funding for Musk companies such as Tesla or SpaceX.
Kasia Klimashinska out of Washington, we thank you for the great coverage. And I want to stay on Musk's America Party because President Trump has let his views be known, as Kasia says. But what does the party mean for Elon Musk and for Tesla? Let's bring in Bloomberg's Craig Trudell, who, of course, leads our global autos coverage. Craig, we've seen Tesla shares down more than 6% on alternative trading systems ahead of the Wall Street Open on Elon Musk's latest foray into politics. I wonder how much that reflects a fear of blowback from the president and how much actually it's a fear that Musk's taking his eye off the ball again.
I think it could be a little bit of both here, right? Where you've sort of maybe reckoned that just, after the first of the sort of blow-ups between these two, that there would be some recognition that there's a lot of risk involved for Musk at continuing to sort of poke the bear and go after Trump. But he hasn't really been able to help himself. He's sustained his criticism of the president's spending bill. The president has attempted to try and turn this into, he's just, exercising, this is all just sour grapes over EV tax credits. I do think that, Musk has been pretty consistent over the years talking about deficit spending and the U.S. needing to get its budget in order. And yet, how he sort of, reckons with that, whether or not it's the smartest move to sort of now go from taking on the Democrats to taking on both parties, and in the process, take himself away from his companies. I think that's the concern if you're a Tesla investor.
Come on, Craig, tell me, do you think he's serious about making this party a success?
I think he's got the money to do it. I think he's also very dug in here. He's also, I would say, really sort of put himself out there as, with some specifics, right? Of I'm going to target a handful of members of Congress, some seats in the House and in the Senate. And he's also, saying already that he's not ruling out the possibility of getting behind a candidate for president. So he's sending every signal at this point that, this will be, something he's focused on for the next year and potentially, years out. And that's, again, just a concern if you're invested in this company, because his political, machinations have been such a distraction for him and a reason for some car buyers to say, yeah, no thanks, I'll pass on a Tesla.
Well, look, just because you can doesn't mean you should, Craig. That's what my mother told me. Craig Trudell, thank you for that update. Now, let's stay with tech, because Foxconn, a provider for both Nvidia and Apple, has reported more than 15% growth in quarterly sales as robust demand for AI servers and iPhones persists. Now, this comes as it navigates geopolitical shifts and trade tensions. Joining us for more is Bloomberg's Newly Purnell. And Newly, just talk us through what this tells us about the strength of AI demand.
Yeah, you're right. They're really a proxy for demand for these new kind of AI chips and services. They posted $62 billion in revenue, which was a good figure. It was in line with what analysts expected. So, yeah, I think we can say that shows that demand is holding steady. It's also really good news, actually, for China, for Apple in China, because Counterpoint, we reported the other day, came out with some research about robust demand for Apple's newest phones there. And of course, Foxconn being a big manufacturer there, I think it's probably also good news for Apple. Yeah, but definitely AI services demand is holding steady.
And how vulnerable is Foxconn to potential tariffs?
Well, they're caught right in the middle, right, of this U.S.-China trade war. Case in point, we saw the recent news about the new tariffs coming to Vietnam, and Honhai, like many global tech companies, has been trying to diversify its supply chain, its operations into other countries, precisely countries like Vietnam. So they're caught in the middle of this, and they actually earlier this year, Honhai, revised down their expected revenues for the year. One interesting thing that we might be seeing actually is that some companies, observers say, might be upping their orders in anticipation of new tariffs coming, so they might actually, in a counterintuitive way, be benefiting from some of this turbulence.
Okay, that's really interesting. And meanwhile, I was waiting for this Grok 4 release. Musk told us that it was going to come just after July 4th, but there's no sign of it yet. Just talk us through maybe why it's been delayed, and if we know anything about what will be different between Grok 3 and Grok 4.
Right. Well, we're a few days on now, of course, from July 4th. I just did a quick scan of his recent postings on X. I haven't seen anything. He's been talking about his America, new political party, of course, you were just discussing. Someone tweeted, or I should say, I posted on X that that the Grok 3 appears to now be able to interpret memes, so he responded to that. But no news yet on when the new version could be out. Why is it important? I'll give you one word: money. We reported that X.AI, the AI wing, has been burning through something like $1 billion a month in cash as it seeks to develop these new models and build out its infrastructure. Musk then took to X to dispute that report, I should say. But it's expensive to do this stuff, and what we might expect from the new version, just better all around. It could have more data, it could be faster, it should have fewer hallucinations. So just in the way that all these models should get better, the more money and the more resources you pour into them, that's what you would expect from Grok 4 as well.
Already getting distracted, you might say. Bloomberg's Newly Purnell, we thank you for the latest there on Grok, which we're still waiting for, maybe tomorrow. But coming up on the programme, we'll get you set up for your trading week next. This is Bloomberg. This is Bloomberg Brief. I'm Lizzie Burden in New York. Let's take a look at what's ahead this week. President Trump's tariff deadline is coming Tuesday night into Wednesday morning, but Treasury Bessent has hinted at an extension. Also on Wednesday, we'll get the latest Fed minutes, and then on Thursday, another round of jobless claims. Remember, on Thursday, we had the stock market hitting a fresh record off the back of the jobs report and traders pulling back their Fed cut bets as well. So we look ahead to what comes out of that. In terms of your micro movers right now, we're looking at WNS off the back of Capgemini, looking to buy for $3.3 billion to boost its agentic AI. We're looking at Tesla as well, falling because of Elon Musk forming this new political party. And then, of course, we're keeping an eye on Apple as well, because the iPhone maker Honhai, aka Foxconn, has met its sales estimates. So we are weaker there in the pre-market when it comes to Apple. Let's also turn to the macro story before we're over and out here. We have had that OPEC Plus decision over the weekend to keep turning on the supply taps, more actually than previously expected. In May, June and July, they'd gone for 411,000 barrel extra hikes, and this time they've gone for 548,000 barrels extra a day. But when you look at the Brent reaction this morning, actually we're higher by 0.6%. We're currently at $68 a barrel off the back of this. You might have expected oil to fall, but it seems like traders have realised that there's enough demand to keep up with all of this supply. We had Goldman and JP Morgan estimating that by the fourth quarter you could see oil falling to $60 a barrel. Doesn't look like it this morning, but of course things could change. But look, this is an extension of that strategic pivot by Saudi Arabia. Bit of a nightmare for President Trump. Yes, he wants lower oil prices to help deal with inflation, but at the same time, what could it all mean for the US shale industry if we do actually see oil prices falling? It's been a pleasure being with you this past hour. I'm with you all week in for Danny Berger. That does it for your Bloomberg Brief. Surveillance is coming up next. This is Bloomberg.